What is the maximum tenure for a resident mortgage?
It is up to 25 years. It depends on your age, your income. Usually, there is a maturity age with the banks. So, let's say for a salaried individual, their maturity age is 65.
Okay.
For a self-employed individual, that maturity is up to 70 years.
Hi everyone and welcome back to another episode of our mortgage series brought to you by Unique Zone Real Estate. I'm your host Venu Rehan. In our last episode, we explored non-resident mortgages in Dubai, from eligibility to documentation and how it gets started. If you missed that, don't worry. The link is in the description. But today, we are shifting gears and talking about something even more relevant to most of our viewers, resident mortgages. So if you are living and working in the UAE and planning to buy a home, this one is tailored just for you. And back with us is Abbas from Specialist Mortgage Broker, a trusted name in helping residents and expats secure the best mortgages deals across the UAE. Abbas, welcome again.
Thank you so much, Ms. Pinu, and it's always a pleasure being here. And I'm glad we are touching this topic because there's a lot of anxiety with new-time buyers, and you realize that it's a very doable process once you understand the whole process of it.
Perfect. Let's get straight to it. For all our resident buyers, here's a complete breakdown of everything you need to know about mortgages as a UAE resident. What is a resident mortgage and how it is different from non-resident mortgage?
So, basically, a resident mortgage is for an individual who's staying and working in the UAE with a valid Emirates ID, with a valid visa. The difference between a non-resident mortgage is that a resident mortgage has better interest rates. They get higher loan to value for property, and they get higher loan tenure up to 25 years.
Okay. Who qualifies as a resident for mortgage?
Well, it's very simple. For a resident who has a valid residence ID, a valid Emirates ID, you're self-employed or a salaried individual, and you need to have a local UAE bank account, and you're good to go.
Is UAE residency visa mandatory for resident mortgage?
Yes, absolutely. That is that one requirement that differentiates you between a resident and a non-resident.
Okay.
Without a valid UAE visa, you will have to apply under a non-resident mortgage.
What are the main advantages of being a resident buyer?
Well, quite a few. First, you get a higher loan to value. That means you get more loan, your down payments are less. You get better interest rates. You get a longer loan tenure, and you have more bank options.
Abbas, what documents are needed to start the mortgage process?
Pretty simple. First of all, the banks don't require any original documents when you apply. You need to have a copy of your passport, Emirates ID, visa, your 6 months bank statements, a salary certificate, pay slips, and in certain conditions, a labor contract.
So a person will just give you a call.
Yes.
And you will tell them to send them everything by email. They don't have to come and visit bank personally.
No, absolutely not. The banks are pretty lenient.
Okay.
As we know, the processes in Dubai, they've made it very streamlined. So a person at the time to apply for a pre-approval does not need to get any physical signatures or even submit any documents and originals to the bank.
All right. And what would be the additional documentation required for self-employed individuals?
For self-employed, obviously they wouldn't require a salary certificate because the name itself is they are self-employed. But additionally, they would require around 6 months to 12 months of their business bank statements,
Okay.
a complete set of their company documents, which are trade licenses, their MOAs, and if your loan value is above 5 million, then certain banks do require audit reports as well. And additionally, there are banks which require your VAT certificate, your VAT returns. So self-employed, yes, you need a bit more of documents.
And it takes good time as well.
Yes, again, it depends all on the health of the business. If you have a very good profile and your audits are very clear to the bank, then it's a very hassle-free process.
What is the minimum salary required to qualify for a mortgage?
Around all the banks, you need a minimum salary of 15,000 dirhams. There are few Islamic banks which also consider applicants as salary low as 10,000 dirhams.
What role does the credit score play in the approval?
Credit score, your credit report is absolutely imperative for your mortgage application. Even before the bank sees your salary, your bank statements, banks are going to take out your credit report from the Al Ittihad Credit Bureau.
All right.
If you don't have healthy credits, the bank is not going to proceed with anything else. Usually a score of anything from 650 to above is considered a good score.
If anybody has existing loans and credit cards, how would that affect their mortgage?
Well, your eligibility is counted as per what in UAE we call a DBR. It's a debt burden ratio. So you're allowed to have liabilities of up till 50% of your income. So everything from personal loans to mortgage to credit cards, auto loans should not exceed 50% of your income. So if you have existing loans, that might eat into your eligibility of getting your mortgage approval.
Okay, so it's very important to understand these things before
I think when you're applying for a mortgage, you should understand how these things will play in your eligibility. A lot of people do not consider credit card a liability.
Yes.
But it's a very common thing in banks. I wouldn't say a common thing, actually, it's a rule.
It's a rule
That 5% of your credit card limit is counted as a liability. So you have a lot of salaried individuals who have really high credit card limits.
Of course,
And when they apply for a mortgage, banks usually have to tell them to reduce the credit card limit to get their favorable eligibility. And a lot of times the clients are very surprised as to why a credit card is affecting the whole scenario of this.
So it plays a very vital role.
Of course it does.
Are joint mortgages allowed?
Absolutely, yes. You can apply a mortgage together with your spouse.
All right.
Or your first blood relatives. That can be your parents or your siblings.
What is the maximum tenure for a resident mortgage?
It is up to 25 years.
Okay.
It depends on your age, your income. Usually there is a maturity age with the banks. So let's say for a salaried individual, their maturity age is 65.
Okay.
For a self-employed individual, that maturity is up till 70 years.
All right.
To give you an example in numbers, if an individual is a salaried individual is of the age of 45, so his maturity being 65, he would get a 20-year loan. But in the same case, a self-employed person would get a 25-year loan.
Okay.
Yeah.
Is it necessary to have a down payment ready before applying the mortgage?
Yeah, it is actually imperative that you well plan your finances before you apply for a pre-approval, because as we discussed, banks give you 80%, so you need to have that 20% in your hand. And even if the properties are above 5 million, then the bank reduces your LTV, so you're getting 70%. So 30% is again, which is what you should be having in your hand. Yes.
What are fixed versus variable interest rates?
Fixed rates are something where your interest rates are fixed for a set term of years. Variable rates are something which fluctuates as per the market trends.
Okay.
Ideally, there are pros and cons for both. Depending on the market condition at that time.
Can residents apply for off-plan mortgages, and what documentation would be required?
Yes, residents can apply for an off-plan mortgage. Usually the bank terms are that they need to have 50% of the client payment paid to the developer. The projects should be ready at 50%. Additional documents, I think the client would need to provide a uqud, which is a pre-title deed. They need to have a sales and purchase agreement in hand, and also statement of accounts from the developer stating that they have paid 50% for the project.
Okay. Do all banks provide off-plan mortgages?
Well, as of now, there are limited banks which provide off-plan mortgages, and the off-plan project also depends on the developer and the project. So it's like there are certain developers, which are usually the tier 1 developers, and certain listed projects for which the bank would allow you to do an off-plan mortgage.
So very limited banks then.
It is limited with limited developers.
All right. How crucial is the property evaluation report?
Well, it's really crucial because your bank decides the loan to value which they're going to give to you based on the valuation report and not your sales price. In the instance, if your valuation report is less than your sales price, then that's the value the bank is going to go for.
All right. So
Yeah.
the MOU price is like
Your MOU or the sales purchase SPA, what we call,
yeah.
is yes, your agreement with your developer or your seller, but the bank goes on the current market value of the property.
All right.
So if the valuation is higher,
Mm-hmm.
then they would go with your contract value, but if it's lower, then yes, they're going to calculate the valuation report.
On the lower value.
Yes.
All right. How long does mortgage pre-approval takes?
Usually it takes around 3 to 4 days
Okay.
for a salaried individual.
Mhm.
For a self-employed individual, because there are a lot of factors to consider
Yes.
in, it would take a minimum of 2 weeks for the
Okay.
approval to come in.
Okay. How long it takes from pre-approval to final disbursal?
Okay, so final dispersal is our banking term. It would usually mean that the client gets the money from the bank to pay to the seller. Now, once you have a pre-approval in hand,
Mm-hmm.
there are a lot of factors which come in where you have to evaluate the property, you
Correct.
have to visit the bank
Yeah.
for the signing of the final offer letter, there's even the account opening.
Mm-hmm.
So I think all this process, if everything is in order, it's around a 2 to 3 weeks job.
So technically a month.
I would
Kind
say
of.
safely a month.
Safely
yes.
a month. Okay. What kind of charges are incurred while applying for a mortgage?
Well, the fees that you need to consider is first, if I go by steps, first
Yeah.
is your valuation fees, which
Okay.
you pay to the bank for them to get a third party evaluator to evaluate your property.
All right.
Then there are processing fees,
Mhm.
there are insurance premiums,
Mhm.
and when it comes to land department, you get charged a mortgage registration fees,
Okay.
and obviously there's your down payment, which has to be ready.
Is it mandatory to take a mortgage life insurance?
Yes, it is mandatory for you to take a life insurance.
Mm-hmm.
You either take it through the bank or a third party provider, and there are few banks which by policy do not ask for life insurance, but if you would ask me personally,
Mm-hmm.
I think a few thousand dirhams for a property which is of worth millions
Of course.
it's very advisable for you to have a life insurance.
Can residents refinance on the existing mortgage?
Yes, definitely that one is possible, and it can be in the case where you are looking for better rates or just simply moving from a fixed rate with your existing bank to even better rate with another. So yes, absolutely.
What role does a mortgage broker play in this process?
I think it's very crucial when a client is looking for a good deal with the banks that he involved a mortgage broker. I mean, there are 11 to 12 banks in the UAE market. For an individual to seek
Yeah.
each rates, each products, and what best he's offering is nearly an impossible task. We help the client understand the product which suits him best with the bank which suits him best. We help him get all the documentations in order.
Yeah.
We having better relationship with the banks increases the approval chance for the client.
Okay.
And again, for a mortgage broker, it's not just getting a pre-approval for the client. A mortgage broker is there till the end,
Yeah,
till
it's
the
the end-to-end
client
process.
gets
Yeah.
his keys to his home in his hands. We are there. So it's imperative that a person who's looking for finance for his property get in touch with a mortgage consultant rather than approach a bank directly.
And especially with us specialist
Just mortgage
mortgages.
brokers, absolutely.
What are the common mistakes buyer must avoid?
Well, one of the most common things which the buyer should avoid is they should really take care of the credit scores.
Correct.
That is simple things like paying your credit card on time, even your utilities, your DIVA, your HSLR bills should be paid on time because that severely impacts your credit score. When they're applying, they shouldn't apply with outdated documents. And one of the main thing is that they should get a pre-approval before going for house hunting, because obviously sellers respond to you better with a pre-approval.
True. Abbas, one final tip for first-time buyers.
Well, I think keep your affairs in order, keep everything ready. Again, I can't emphasize enough to contact a financial or a mortgage advisor before applying or even going out hunting for your loans. It's going to save you a lot of time, money, and effort, and it's going to give you a very streamlined process to getting a dream home or office or a shop for yourself.
That was packed with value. Thank you, Abbas. For all of you planning to buy a home in Dubai as a resident, we hope this episode gave you complete clarity. If you still have questions or want one-to-one help, feel free to reach out to Abbas or connect with us at Unique Zone Real Estate. Until next time, stay informed and invest wisely.